I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Very special video for you today. This is perhaps the biggest week in the market in this decline cycle, this boom bust bubble cycle that we are in. Why? Because the Fed is meeting, and on the 22nd, which is a Wednesday, they are announcing whether or not they will pause or they will raise rates. We've already had the second and third largest bank failures in the history of the country, the largest bank failure since the great financial crisis. It's a lot to consume here, guys, and I tried to warn everybody about this pattern on the S&P. It's on the thumbnail, tracking identical to .com. Guys, you have to understand the boom bust bubble that we are trading in. The market is a series of bubbles. .com was equities, GFC was housing. We now have the first multi-pronged bubble ever in the history of the country. Housing versus median household income is higher now than it was in the GFC. Equities are more overvalued now than they were in the .com crisis. We've already been over those ratios, but it was almost a 2x on the run-up. Since we printed trillions and trillions and trillions of dollars, the government spent trillions more sending out checks. There's a fantastic documentary, guys, that came out on PBS of all stations. And there's something I want to talk about really quickly because this is so important to understand. If you understand market cycles, you can be predictive of what's going to happen in the marketplace. So this video is called The Age of Easy Money. I'm going to link it because it's so important. You know, we get nothing for this. I'm going to link it in the video description. I want to show you guys a few minute clip here. It's like 3 or 4 minutes long. It's very important. And I want to highlight something. When I started working at Merrill Lynch in 2008, in the midst of the great financial crisis, I started following Nouriel Roubini. I started following Jeremy Grantham. Back then, it was like the baby days of social media. I was reading their publications, tracking the interviews they went on. Nouriel Roubini is an economist. He's in this clip. Nouriel Roubini was an economist for, I believe, Bill Clinton and or Obama. Now, his politics are probably nothing like mine. As a matter of fact, I know they're nothing like mine, but he's brilliant with economics. Jeremy Grantham, as you guys know, is a longtime bubble tracker. His politics are also nothing like mine. It doesn't matter if you understand economics. You can understand what's happening in the marketplace, okay? So I'm not opinionated about someone's personal politics. I care about whether or not they actually understand what's happening in the marketplace. And you're going to see in this video clip, they're also going to go to Guggenheim, Scott Meinert's firm, where they talk to the co-chairman of Guggenheim about what he feels like is happening in the marketplace and how scared he is of the marketplace. And the video clip's going to end with Neil Kashkari of the Minneapolis Fed. Okay, the Fed head from Minneapolis. It's really great how it ends. But guys, this is a fantastic video. It's an hour and a half long. I highly suggest all of you watch it. We're going to be demonetized for playing this. So just enjoy this, take it in. You can help support this channel, like, subscribe, send this out to your friends. Guys, check out our two fantastic sponsors, SimpleFX, a decentralized exchange with up to a $5,000 instant bonus in your account based on deposit. Details in the video description to trade all of the markets, equities, commodities, Forex, and cryptos. And BingX, if you don't want to use a VPN, you want to be on a traditional crypto exchange and trade all the myriad of altcoins, check out BingX. Details in the video description. Use our link, get our Market Makers bonus, and we have a private tournament on our link starting on Monday. $8,000 is up for grabs. Top two prizes are cash. The other prizes are in your account and available for trading. Lee, let's go ahead and kick this off with the video clip. Guys, again, it's a little bit long. It's 3 or 4 minutes. Highly recommend you watch this video clip and don't skip through it. We're going to cover cryptos. We're going to cover the equities. We're going to cover gold and silver in today's video. I'll see you on the other side and let's talk about it.
One of the most pessimistic voices is economist Nouriel Roubini, who became famous for his accurate prediction of the financial crisis in 2008.
We have had literally a few decades of ever-increasing bubbles that have been fed and supported by central banks. And not only we have had bubbles, but we have had bubbles that have been fed by excessive leverage, excessive private and public borrowing, and excessive risk-taking. The party is over. Inflation is high and rising. Central banks have to increase interest rates. That is bursting the asset bubble, is increasing the amount of the debt servicing of everybody that overborrowed like crazy. So we lived in a bubble, in a dream, and this dream and a bubble is bursting and is turning into an economic and a financial nightmare.
If Roubini's prediction of a debt crisis is correct, then Jim Milstein would be on the front lines of it. He's known on Wall Street as the guy who countries and companies turn to when they run into trouble and need their debts to be restructured.
Wouldn't a debt crisis actually be good for your business?
You know, I'm getting a little too old for this.
Meaning what? Too old for what?
This business. No, it'll be a boom for the restructuring business, but I just don't think it's avoidable at this point. I think we're just, the bill has come due, and it's going to have to be paid.
How worried are you about what's happening right now?
I've never been more worried in the 42 years that I've been a professional, either as a lawyer, banker, or government servant. The American corporate sector has never been more levered in American history, never had more debt. And American households are just about as levered as they were heading into the 2008 financial crisis, whether it's student loans or mortgage loans or car loans or personal loans or credit card loans. We've borrowed a lot of money as a people. And so the Fed is absolutely right to try and get it under control by raising interest rates and slowing economic activity. But the most highly levered players in our economy are going to come under real stress, whether that's households or businesses or governments, as interest costs rise.
Are you basically saying that we should be preparing right now that there would be, a bursting of this massive credit bubble?
It's happening right in front of us. It's happening right now.
Are you usually this gloomy, or am I just getting you on a bad day?
You got me on a bad day.
One of the concerns is that there's a kind of debt bomb out there, both in the American economy as well as the global economy. How concerned are you about a credit bubble popping?
We're looking at the data. We're not seeing evidence of such a popping. We're not seeing evidence of delinquencies taking off. It might happen in the future. It might, but I'm not seeing evidence of it. Households on average have very strong balance sheets. The big banks, which can be very risky for the economy, are well capitalized relative to where they were before 2008. So we're not seeing evidence of it yet. Can't rule it out.
So I guess the question, though, is how much disruption in the financial markets are you willing to tolerate now that they're adjusting to this new interest rate environment after more than a decade of zero rates?
We live in a market economy, and market participants need to find a way to adjust to a changing economic landscape. It's not the Fed's job to bail out Wall Street investors if their stock portfolios go down. Obviously, we need to keep systemic risk from spilling across the whole economy, and when those events happen, we are prepared to act. But in my view, the bar from us acting should be quite high.
I mean, the Fed has come to the rescue several times, and we've talked about this in the past, of the financial markets that had grown vulnerable and brittle. So are you saying, I'm asking, what degree of disruption would you have to see in order for the Fed to intervene?
We're a long, long way away from that. I guess I would say it that way. We are a long, long way for any kind of disruption that would warrant us stepping in that way.
Less than 5 months after that interview, the Fed would indeed have to step in.
In breaking news, the US Federal Reserve has bailed out the Silicon Valley Bank, which had collapsed over the weekend.
It enacted emergency measures to shore up the banking system after 2 banks collapsed.
This is the biggest bank collapse since the 2008 financial.
That's really a fantastic video clip if you guys watch the whole video. Again, highly recommend it. I think it's very important. It's like watching The Big Short, but it's done by investigative journalism, interviewing a whole slew of different people, ex-Fed heads, current investors, market billionaires like Jeremy Grantham. Very important to see this, guys, because the cycle's repeating. You have to understand, we have the equities bubble that we had in .com, and we just had our first bank failures, just like Lehman and Bear Stearns. Okay, this is all part of the cycle. And you guys know this watching this channel. We track these cycles because it makes it so much more predictable and profitable to trade in this space. And if you watch that, you'll also be able to forecast what's going to happen politically, which I find fascinating. So not to go off on a tangent here, but what happened was we had the ex-president Bush, right? Then we had the great financial crisis. Obama got elected. A lot of Democrats got elected. And then what happened after great financial crisis? They go over it in the video. And again, remember, this is a public broadcasting station. So very, very politically liberal station. They kept doing quantitative easing, sending out money. You guys know about all the different things they did. And what did the bankers do? The guys that are my age remember this, but a lot of people don't remember this. I was working at Merrill Lynch, okay? Our CEO got a multi-million-dollar parachute. All the bankers took massive bonuses and didn't reinvest that money into the small businesses. They didn't loan the money out, okay? They went and bought the same bonds that the Treasury or that the Fed was buying, okay? They were looking to make even more money. And what just happened with Silicon Valley Bank? It's really amazing. You heard Neil Kashkari there at the end say, this is, 5 months earlier. We don't see anything that's showing us in the data worrying about a credit bubble. We're just not seeing it in the data. The bar is really high for us to have to bail anybody out. And of course, they said at the end there, 5 months later, the Fed's already bailing out 2 banks. And Janet Yellen clarified, these are the only 2 banks so far that they're bailing out. It requires a vote, an agreement on the committee, FOMC committee, supermajority agreement to bail out the next bank. So these 2 banks, Silicon Valley Bank, which once again bailing out lots of millionaires and billionaires, and New York Signature Bank, they bailed these 2 banks out, guaranteed all the deposits. And this is the exact same thing that happened in a great financial crisis. Silicon Valley Bank, the prior couple of weeks before they went bankrupt, guess what the executives did? They sold all their stock. The day of the Fed coming in to take over the bank, they paid out all the bankers' bonuses. Why? Because the Fed was coming in and they'll get all that money back. So when you hear Biden say these bailouts won't cost the taxpayers anything, it is 100% bullshit. You know why it's bullshit? Because where does that money come from? So what the Fed did, the Fed allows these banks and other banks now to come in and give them back their securities, their bonds, and the Fed gives these banks cash, okay? So the Fed gives these banks cash. So what the Fed just did was add $300 billion with a B to their balance sheet. That wipes out 4 months of quantitative tightening. Understand that. They've been quantitative tightening for 8 months. They just wiped out 4 months of it by giving banks essentially loans, taking on their securities and giving them cash. Now, what that does is it devalues the dollar longer term. So what does that mean? It means everything costs more. So essentially, you have quantitative easing with one hand, you're giving the banks cash, taking back their bad investments, giving them cash, and then you're raising rates with the other hand, okay? That's what you're doing. You're easing and tightening at the same time. That's why this makes no sense what's happening right now. But guys, The banksters do the exact same thing every bailout. Hey, everybody gets paid. Let's all get our bonuses. Let's all do that. And this will scale up larger, okay? When these other regional banks start to fail, as the economy pulls down more, you have to remember, we are in the very beginning of this. You will see that if you understand the market history. Watch that video because it's so well done. I was really surprised how well done it is. Doesn't really have a hard political slant in either direction because both political parties are guilty of this. But one thing that was interesting from a political perspective is basically the party that's in now is going to get eviscerated, which is the Democrats under Biden. So that happened under Bush. Bush got, Bush was out. That was his second term. Biden won. Democrats swept the elections. And then what happened when the American people saw all this money going out? You'll see it in the video. The Tea Party was formed. The Republicans swept the elections. And that's the same thing that's going to happen this time. Unless the candidate is so horrible on the Republican side, whoever runs as a Democrat, if it's Corpse Biden or somebody else, he's going to get annihilated because the economy is going to be destroyed. That party will be annihilated, and that's really your last chance to fix everything in the economy. We wasted a whole decade of free money, of 0% interest rates where we could have rebuilt the country. We spent it on foreign wars. We spent it on a bunch of things Americans don't care about or don't like or didn't want to be involved with in the first place. So just keep that in mind, guys. Economic literacy is important when you go to elect people, regardless of party. That's where we're at in this country. So anyways, the history is fascinating to me, but let's get into the charts. I know that's what you guys are here for. So looking at the E-mini again, guys, we go over this every time, but I know so many people have questions about this. So I want to share it again. Trend line from the all-time high in .com on the left, trend line from the all-time high in the modern market on the right, exact same candlestick patterns, rejected at the trend line, pivot down, exact same candlestick pattern, 9 bars, 63 days, rejected at the trend line, pivot down. This red line on both charts, that is your fall equinox that gave you the base. Shortly thereafter in .com, you rallied after the fall equinox. What happened in the modern market? Here's your fall equinox. Shortly thereafter, you got your hard bottom here in early October once again, and then you rallied up and you pivoted to the outside on the 16 bars, 112 days, just like you did in .com. And now you're back testing the trend line. Spring equinox in green on .com gave you the local high, and then you cratered 34%. And that's where we are now with Powell announcing what he's going to do on Wednesday. Now, guys, I have to tell you, I'll give you my personal opinion about what I think he's going to do and the likelihood. Lots of people want him to pause. They fear the Fed has gone too far, hiked rates too fast. And of course, they have hiked rates extremely fast because inflation's very high and the core is still rising on inflation. I think Powell has covered to raise 25 basis points. The European Central Bank did 50. I think he should do 25 basis points. He honestly should do 50 basis points. We should be above the rate of inflation to be restrictive. But we have a fractional banking system, and it's well known now by most of the American people because of YouTube and other social media. Banks don't actually have all of your money on hand, okay? They loan that money out. They invest that money. So bank runs are really easy. So it depends how fearful the Fed is. Now, they went and did this backstop, added $300 billion to their balance sheet. So this could go either way. So I'm going to say 50% chance we pause, 50% chance Powell raises by a quarter point. I think 50 basis points is most likely a very small percentage chance. And just as equally, people are saying he should cut rates. That's not going to happen. We would have hyperinflation. It would take off. So it's an extremely small percentage chance. So basically a coin flip, guys. And the way this will play out on the S&P, and we'll look at this, how it's going to play out on Bitcoin. If we rally up, which we're positioned to do so if Powell pauses or if the market's happy with the quarter point rate hike, we're going to rally up. And if we end up making a co-equal high, just back up here to our 4180 level again, it's exactly what we did in .com, and then we cratered, okay? And again, spring equinox is Monday, guys. That provided our local high. Let's see what the markets do tomorrow or tonight in futures and tomorrow on the spring equinox. Be really, really interesting to watch if this plays out the exact same way. Looking at the S&P on the weekly, Market makers Caterpillar is getting compressed here, guys. This is ready for a move, which I think potentially, again, depending on Powell, could be a rainbow move for a co-equal high. And then we start to sell off with this nice double top here on the weekly, just like .com. Remember, just like in .com, we're back testing our 50-day moving average. I forgot to add that on here. Show you the 50 again. There's your 50, the red line. Okay, you see this right up here at the spring equinox. Cut a couple candle wicks above it. Tested it that third time, fell apart. Where's your 50 in the modern market? It's right here. Same exact spot, guys. Got some candles above it, fell back, and now you're back testing it, got rejected. Will this candle back test it and come back up or make a lower high? It's going to be really fascinating to watch. Looking at our pivot chart, guys, if we do get that rally, again, this rally on the spring equinox, we could come out and we'll see how long this lasts. You're back below the 200-day moving average, or 50 or 43 bar pivot pattern that has been perfect here in the S&P and the accumulation of Wyckoff. And again, that April 14th date could provide our bottom if we sell off hard, or it could be the pivot for the sell-off on April 14th if we rally because Fed Chair Powell pauses and the market is really excited about that. We have earnings coming out in April, guys. So again, the trigger for the sell-off is incoming. It could be as early as this week, or if we rally, the latest I think it would be April 14th, and it all depends what the Fed does. Looking at the S&P here on the daily, you can see you lost the 200 again, okay? And the areas you want to track for people that are looking to trade this, remember, we shorted this up at 41.80. Fantastic decline. Now we're looking for a retest. Your 45 angle intersects with the 618 at 4,000. Key area of resistance. You want to watch this level. If price got really bullish because of a pause, we also had record inflows again of retail buying the dip. They don't get the message. Everybody says, people are so bearish. They have so many bearish channels on YouTube. People who understand market cycles, people who study these things, people who study the inflation history of the country, they're not invited on the business networks that are sponsored by Merrill Lynch, Bank of America, BlackRock, these big companies. Why? They make money off of investing your money. They make money off the fees, okay? So they don't want somebody on there saying, sit in cash and just wait, it's all getting cheaper. But that's what's going to happen this year, guys. It's all going to get cheaper. But these key areas we're looking at, guys, 4,000. If we rally, okay, 4,000, 40.52 and 41.20. This would bring you back up in this range of that co-equal high for your double top. This is a daily time frame. Get some candles and maybe get your decline, or come out to that April 14th date if we do rally, if Fed Chair Powell pauses, okay? So that's what we're looking at here. Let's look at Bitcoin. I know a lot of people want to know about Bitcoin. And guys, what target did I tell you we could literally get to? The last couple of videos, I said, look, you can get to this target, and we nailed the target. I'll show you on the daily, but this is the weekly right here. The 1618, right? The 1618, let me get the high there. The 1618 was at 27,821. And this is where price is right now. It's at 28,000 as we're talking. So let's look at this. If Bitcoin keeps pumping up like this, the markets could have an update tomorrow. I think you guys are going to be surprised what I'm going to show you with Bitcoin, because I see a lot of people talking about decoupling. I want to show you something that may make you think twice about that, okay? But you can see where we are in Bitcoin, where I predicted to go down to that 4,600 level. Once we get to the discuss phase, after Bitcoin is done accelerating, and there's a reason Bitcoin's accelerating, guys, and I'm going to show it to you. Let me go show you that right now. Actually, this is Bitcoin and the Nasdaq in blue and Bitcoin in orange. This is very important to understand, because I saw a video, like there's a guy out there, got tens of thousands of views, has Bitcoin going to 1 million by the summer. I see a lot of social media saying, this is what Bitcoin was created for. You can't trust the banks. I understand all of that. Okay. I'm going to preface this again with saying it doesn't matter to me. Okay. I don't own any Bitcoin. I don't care if it goes up or down. I trade it. Okay. So this is where Bitcoin in orange made its all-time high. The Nasdaq made it a week after. This correlation here, look at orange and Bitcoin spiking up, Nasdaq spiking up, both falling, both spiking. And then you can see this exact movements. Bitcoin this year has been tracking at a spot 95 correlation to the NASDAQ. What does that mean? A 1-to-1 correlation, a 100%, is a perfect correlation. In other words, it's moving lockstep with the NASDAQ. So why is Bitcoin rallying? Because a lot of people are looking at the S&P, and the S&P is struggling. It lost its 200. Bitcoin bounced off its 200. So did the NASDAQ. Look at the identical movements, the double bottoms they both made. Bitcoin is viewed by big money as tech. That's what it's viewed as, speculative tech. You may not view it that way. Michael Saylor may not view it that way. Other social media influencers may not view it that way. That is how they view it, and that is why you are tracking with a near perfect correlation to the NASDAQ. Spot 95, guys, near perfect. So if Bitcoin is to decouple, the NASDAQ will have to do this, and Bitcoin will have to do that. They will have to move inversely to each other. Right now, they're moving almost lockstep with each other. So that's your key, okay? If Bitcoin's going to go off to the moon, go to $1 million or go to $500,000, whatever you guys want to say as a target when the markets crater, because that crater is all but guaranteed to come now. You have to understand that. So when that happens with the markets and the S&P comes down to that next wave level down, which again I have at 3,100 to 3,400. If the NASDAQ, which the NASDAQ, of course, is going to crater with it, if the NASDAQ craters and Bitcoin holds its ground or even moves up, well, then you have a valid argument. And I'll be the first one to tell you have a valid argument. It's decoupled. What do I think is going to happen? I think if the NASDAQ or when the NASDAQ craters, Bitcoin's going to crater as well. That's what I think is going to happen because of the correlation is so high. So you can see here our target 27,821. You can see price is just now poking its head above it. Again, the next level target as the NASDAQ keeps its bullish momentum. Lots of money is rotating into tech. I know a lot of people in crypto don't watch the broader markets. They keep saying this over and over on the business news. Microsoft, Apple, Google, these are as good as banks. So there's a lot of money floating into tech, which is why the rest of the market's struggling. The Russell, the S&P, and the NASDAQ's going up. Bitcoin's going up. That next level target, I told you, if everything got bullish, if Powell pauses and we start hitting new targets, you could come up to 31,180. Now, the logical question would be, well, Brendan, is this going to change anything on the projections? And the answer is it could. We have to see where this goes. As of now, no, I'm still looking for around 13K Bitcoin on that next wave down. Again, it's going to follow the NASDAQ, okay? So let's look and see what the NASDAQ can do. Right now, Bitcoin's above 27,821. Watch for some bullish momentum. The levels beneath it, you have your 45. You want to watch 26,264 because if the markets are choppy, you're going to get chop in here between 26,264, 27,821. What I would want to see is Bitcoin get out above 27,821 to come up. Guys, I'm not excited about this move. I know many of you are, and I'm really happy for you if you're in longs and you're making money. As you guys can see in the intro with the screenshots, we're taking longs and shorts in the room. But I'm trying to impress upon you. I feel like it's my moral duty. It's my opinion, but this is temporary. Wherever this goes, it's temporary. It's not going to survive what's coming in the marketplace because the markets are literally lockstep on track to repeat .com in the great financial crisis, okay? And you have to understand that. I understand you don't want to, or you have a bias because, no, it has to do this. I own it. People get emotionally attached to assets, but my friends, I'm telling you, it's how people get wrecked. So just be really, really careful. NASDAQ on the weekly. Again, pivot coming up. You can see the NASDAQ bounced right off the 200, being very bullish, but you can already see here on the weekly, it's printing a nice double top. Okay, we got a dragon pattern that formed right here as well. I'm going to show you where the NASDAQ's going when this starts to roll down shortly after the spring equinox or that April 14th or 7th. I think on the NASDAQ, the same 43 days has it April 17th, but basically around April 14th. So shortly, soon, we will have a sell signal on the NASDAQ, whether it's this weekly candle for the spring equinox or that first week or two of April, you'll get your sell signal. The NASDAQ, I think, is going to come down to 9,216. And if it loses that, it's coming to 7,989. This is in conjunction, in confluence with the S&P coming down to just that 3,400 to 3,100 level. Okay, the NASDAQ's going to lose more value here on this run down. Remember, the NASDAQ went down 84%. 10% in .com. Amazon went down 93%. Totally different company now, but these are the types of numbers we're talking about. And when you look at this drawdown, where's the NASDAQ going to end up? I think you're at least going to 4,446 at the end of this bubble. That's deeper than the pandemic. And you're going to definitely hit 6,429, which brings you back down to the pandemic level lows, which was the 200, guys. That was the 200-day moving average before trillions upon trillions got injected. And look at this. The NASDAQ went up more than 120%. Again, so did the S&P. This run up here that the NASDAQ did in less than 2 years was faster and larger than the run up in .com, creating a bigger bubble. So very easy for me to say you're coming back to whence you started, a 100% round trip. And I think you're going deeper than that. 446 is where I think you're going. The golden ratio, 1618. Why? Because the fibs are tracking beautifully already. Got a 50% retracement here using Dow theory and fib waves. Bounced up, about to make your double top here. Might get a little rally up. We're going to look at those numbers. And then you're going to come back down, guys. And I think that next pull down, once you lose these lows that you established in October, the 618 is too close to those lows. That's why I think you're going to the 786 at 92.16. And if it's ferocious sell-off, watch 79.89 at the 1 fib, because it's a geometric mean between the 618 and the 1618. Looking at the NASDAQ on a 3-day chart. Guys, this is going to be a huge trade. Okay, understand the S&P is struggling. So when you understand when you're trading, understand target selection is so key. That's why I added the DAX and the CAC, the German 40 and the French 40. Target selection is key. The NASDAQ's outperforming because of fear and rotation back into tech. And if you look at these levels, 12,754, key level that you got up to. Look at this double top printing on the 3-day chart. If we accelerate, if Powell pauses, look at the point of control here for your volume. It lines up perfectly with the 618 at 13,047. If you start to see price struggling there, watch 13,047. Let me get rid of that so you can see these. The 1 fib or the 786 is 13,419. And these are the other areas that I'm tracking. I'll expand it now. You can see this would be the top of Wyckoff. Okay. So you could see something like this. You could see the NASDAQ breakout. Powell pauses. He says, oh, we're going to assess the market, blah, blah, blah. The markets get bullish. This pivots out, tries to come up, and does something like this move and starts making your top, your distribution top, and then comes down. So these levels I'm tracking, guys, 12,754 brings you back to your co-equal high, just like in .com on the S&P, and then 13,047, point of control for volume, and the 618 on a trend-based fib. And then I'm looking at 13.4 at the 786. That's your range you're trading in. And if Powell does 25, we have to see how the market digests that, because this could get volatile. You could get some spikes up and immediately collapse. I don't know. We don't know what he's going to say. We don't know how he's going to answer the questions, and we don't know what the rate hike's going to be. So highly volatile, extremely important week. NASDAQ is key to watch because of its outperformance. It has more ground to give up when everything pulls down. Looking at the daily, here's our 45. Here's our 200 in the white line. You can see the Wyckoff range. Again, 486 at 12,754. You can see you're trying to hold the 3-2 at 12,523. And you can see this beautiful double top. I always like to look for fib confluence. You can see I laid out my trend-based fib here. Let's go ahead and move this volume off. Trend-based fib from this impulse up to that local high down to that low, and now you have your impulse back up. This is how I got these levels, guys. And then you can see you have a double bottom structure here in the daily. So what would this be on a trend-based fib? Let's throw that low, that midpoint, and then that low again. Fibonacci confluence is very important. It provides strong resistance. Look at your 618, that 12,733, 12,054 here, 754. That's the 1618 and the 486. Here's your 618 and the 2058 at 13,047. And then that next level at the 786, you can see that up here at the 13.4, guys. These three levels, if price does accelerate and Powell does pause, does something like this, this is where I think you're going to be coming down from, looking at our pivot date there of the 18th or 14th of April. Okay, this is the 18th on the NASDAQ. So that's what I'd be watching, is these 3 key levels where you could fail. Let's go ahead and get rid of this and see what we got here. And again, we don't have to rally up, guys. This could easily be Powell could come out hawkish. He could surprise us. I don't particularly think he has a very strong spine. But if we want to see where this could go on the downside, let's just remove this. Let's just say the market starts selling off tomorrow, or Powell, whatever. Powell comes out. We're just sitting here in this range. We can do this a couple different ways. You just pull a simple fib retracement. You can look at your levels going down, 12.2 or 12.3. 12,298, 12,193, 12,060, 11,891, 11,676. You can see it coming all the way back down. You can do it that way, guys. You can also use a larger wave projection here for this run up and see where this gets you to. So different ways you can do it, but the key thing is, guys, is really understanding the bearish structure that's being built here. And if the market does want to rally, particularly the NASDAQ, this is a key area, as you can see, going back in Wyckoff all the way back to September of 22. You've had a lot of problems getting above this area, and just above it, you have peak volume resistance as well. Looking at the Russell, not a lot going on in the Russell, right? Had an awesome trade on the Russell at 2,000. Fantastic short, 14, 15% on that short. Gave you this pattern here. And we had this type of movement here. I showed you this with triangles, but this is a chameleon pattern as well. And you can see this, and the market sold off. So where you are in the daily, guys, you're just, you're stacking candles. The Russell has a huge amount of these regional banks. These regional banks that have become toxic now with the stock selling off. So you're just stacking candles side by side. I'm not looking to do anything with the Russell. You're below the 200. Maybe if you come back up and back test the 200 at 1820 and fail, that's a potential entry point for a trade. I'm looking at the assets that are pumping. Guys, we got to go to gold. Man, the guys that I like too, some of the guys that I like, even though they don't like crypto, guys like Peter Schiff, he's out there talking about gold. And why wouldn't he? Look at this nice run up. Remember the last video I told you, don't do anything with gold. Let it keep going up and see where it gets to. Where does it have to get to prove itself? This chart goes all the way back to August 2020. You see that up thrust there? You see this up thrust here. And then look at the 1618, how beautiful this lays out at 2055. For me, gold to prove itself has to get above 2055 and hold it, okay? Because again, I know Peter Schiff's commentary, he doesn't think this will be a repeat of the great financial crisis where gold went down 34%. I personally think it will be, because the banks will be forced to sell it. We've already seen the weakness in the banks and the faltering of the banks. So I think it will be. He doesn't think it will be. But anyways, I'm bullish on gold if it can get above 2055 and hold it as the market declines. As of right now, this is a potential massive trade if it gets up there and fails. Look at this sell-off that you had. Where did gold get up here, guys? This is March of 22 when everybody was super nervous about inflation. This is where gold got to, and then look what it did. 22% decline. Massive, massive move in gold. So if this gets euphoric and comes up here and does not hold the 1618 at 2055, I mean, you can look lower too at 2001, but it looks like it's going to hit 2001 for sure. But you had a lot of resistance there, guys. Watch your 2000 level. Watch your 1618. I guess I would throw on the 1414 as well. 1414 at 2023, so you could just see these levels. But the key level here is the 1618 at 2055. If you get up there, that could literally be a golden trade, a golden opportunity for a short in confluence with the market showing weakness. If gold shows weakness and tops out here, guys, massive opportunity, okay? And if it doesn't, if it flips it, holds it for support, that would be a good area. If the markets are coming down and gold is staying bullish and holding 2055, that could be a good area to hitch your wagon on for the ride, okay? Gold has to prove itself, because all it's done in this range where it's at now, up to 2055, and we're talking about, what, $75 difference here. all it's done in this range is capitulate massively. So be very, very careful. And we have that previous bubble cycle where gold fell apart. Silver, same thing, guys. Silver is easier even because you have a descending trend line that has been valid all the way back to August of 2020. Silver has not been able to hold above it. We took that nice short at 24.41, got that 15% decline. Silver's pumping back up. So what's your key areas? Watch your 618 at 23.48. Watch the trend line. And for me, for silver to reverse this descending trend line, you need to get above the 1 fib at 25.27, guys. You have to get above this, hold it. And if the markets are descending, same thing with like Bitcoin, right? If people want to say Bitcoin's moving like the metals, if the markets start descending and the metals go up and Bitcoin's going up, then yes, those could be assets you could hitch on to. But with Bitcoin, you're tracking to the NASDAQ. And when I'm looking at metals, I'm thinking about the GFC and I'm thinking about the bank failures we already had and the more that are to come. So this is a key level here, 25.27. This will reverse this downtrend if you can hold it. If not, you have key opportunities here up here at the 786 at 24.27, right around that first top distribution box that we made, guys, that we got this nice trade. So watch that and see if you start topping out, the markets start pulling down, short opportunities present themselves in silver. German 40, guys. Long video, sorry. German 40 did a simple fib, what is this? A fib retracement? Yeah, fib retracement here on the German 40. So you can see you hit the 486 cleanly. This is your Wyckoff here. So your all-time high over here. This is your Wyckoff. You pivoted out to the upside. You bounced off the 46. And what typically happens, guys, if these markets do start to rally, right? If Powell pauses and the markets get a little bit more euphoric, look to see if you come up for some type of double top structure, just like the NASDAQ, but even more so. The French 40, the German 40, outperform the U.S. markets. If you lay these over chart for chart on the U.S. SPX, okay, the S&P 500, they rally and base within a week or two of each other on all these major market moves. So you're way overbought, in my opinion, on the DAX. This is the DAX, the German 40. This has Volkswagen, Mercedes, BMW heading into a recession. Europe's at 8.5% inflation. This has big German companies. And guys, in .com, the DAX went down 74%. And your 200 on the daily chart anyways is well below you. So I'm looking to see if this will come back up for some type of double top structure. Here's your support structure. If you continue to sell off, 618 at 14, 466, 786 at 14, 136. And if you look at this quite simply here, you can just do a simple fib retracement, guys, just like this right here, like that, and see where you come up to. Watch to see if the DAX can get up to 15, 283s is 618. In that area, the 786 is 15, 459. Watch that area and see if you can get a nice double top here in a 3-day chart. Could be a fantastic trade. And then CAC is the same thing, guys. I mean, amazingly, you hit the 486 fib. Looking at the exact same movement, throw your fib retracement down. See if you get a bounce up. If the American markets rally, if the European markets rally, if we get a pause, or if they're happy with that quarter-point rate hike, this could provide an excellent trade because all of these at this juncture would be throwing nice dragon patterns, okay? Just nothing more than a double top. Come up to maybe like a 786 retracement, something like that. Be a beautiful dragon pattern. You would be able to capture this decline. And where is your 200? Let's just look really quickly because the video is super long anyway, so who cares, right? Let's look at the 200. If you guys made it to the end, you are true troopers. Looking at the 200, your 200 is all the way down here on the CAC, guys. Again, these trades, I think, that's 6,495. Just to come to where the S&P is currently struggling, you would have to drop from almost 7K down to 6,500. Another 500-point drop. So let's see if you get any type of rebound to potentially put some action on there. All right, guys, this may be the longest video I ever made, but I felt like that clip was super important. Please do like and subscribe. Consider checking out our Discord. It is free by checking out one of our sponsors. Contact Lee in the Telegram. I will talk to you guys next video. Watch Powell, guys. I guess the next video will be out on Wednesday for the Fed. Maybe I'll do it Tuesday if anything happens beforehand so we can talk about it, okay? But look for the next video. Talk to you guys soon. Take care, everybody.